All right, we are back with another Stable Spotlight. We are here with Dmitry. Dmitry, thanks for joining us.
You're welcome. I'm very excited to be here, and thanks a lot for inviting me, guys.
Why don't we start with your intro, your name, what are you building, and first, maybe someone who hasn't heard about the business, how you would describe it in a very, very simple, high-level fashion.
Sure. I'm Dmitry Lazarevich, co-founder, co-CEO of Wyrrex. So we're mostly known as a card issuer, which we started to do in 2015. So it's basically like in your banking experience for the customers if they want to spend their digital assets. And yeah, we've been licensed and regulated, principal member of both Visa and MasterCard, and working in UK, Europe, and 6 countries, Asia Pacific region. And recently what we launched is what we call the third generation of a debit card, specifically for blockchain assets, is essentially when we have an app chain and the customers can pay out of the non-custodial wallets, and we are launching it in the US tomorrow. Excited.
You're launching this tomorrow?
Yeah.
Oh my goodness. How long have you been building this?
Around a year.
So Wirex, given your background, this is from my understanding, and I'm still learning about the business. This was not a company that started natively using blockchain rails, correct? This was like a traditional financial technology company that is now kind of, evolving and building on-chain over time?
I would say so. Although we started specifically focusing on blockchain assets since the day one.
Okay.
But we started like in a more traditional way without using, so basically the payments in a non-chain manner as we are going to do right now in the US, and it's already live in other regions. So we actually call it the third generation of the product now. So the first one was basically you have your digital asset, your Bitcoin, Ethereum, you make a deposit, you exchange it into dollars, you load these funds onto your card, you can spend it. That's the first generation, very basic, very simple. The other one that we had before is when you still make a deposit, but you don't need to exchange, you just link it to your card, and when you pay, we do everything on the background for you. We exchange it and settle.
The payment is when that exchange happens to essentially liquidate your holdings, is the phase 2.
Yeah, that's the phase 2. And the phase 3, you don't need to make a deposit. That's the big difference, right? So you have a non-custodial wallet, and via account abstraction, you give us a permission to draw funds up to a certain limit, which you can change or revoke completely anytime. And at the point of sale, we originate on-chain transfer from your non-custodial wallet in stablecoins, and then we settle with Visa and stablecoins. So the entire cycle is without fiat, which is very, very interesting and new.
Really interesting. Okay, so I was talking with Tom from Arculus. We had Raj from Portal talking a lot about like cards and payments. How would you, for those who might be familiar with the typical card, like you got Arculus, Rain, Kulipa, Reap, Wyrrex, are these partners of yours? Are they similar businesses in your mind? From an infrastructure standpoint, do you think of it similarly, or are there differences that you would call out there?
I'd say it's quite similar. Probably the main difference, I'd say, is that we've been around for a little longer, and we have a bit more like licenses and principal membership and these kind of things, which is fine. And I think we're going to see more and more similar companies in the future. And the market is big. If the stablecoin is going to be adopted, to the next level, then obviously, there will be enough space for everyone.
And this is a debit card.
It is a debit card, yes.
Not a credit card.
Not a credit card, because in crypto with credit cards, it's not exactly. It doesn't exactly make sense to me, at least, because usually how these cards work in reality, you use your digital assets as a collateral. So, for example, you've got a Bitcoin, you can use it as a collateral, and you get basically stable coins that you can spend, and then you can either settle your debt or not, up to you. And you can do it already with a debit card. It's exactly the same way. You don't need a credit card. The difference with credit card is you need to go with the standard one. You need to go through the credit scoring system and things like that.
Yeah, you're operating in a totally different landscape. Like, I have let's just say, typically this is the framework most people have. You have a debit card that's tied to a bank account. When I spend it, we pull from that bank account. You're saying now, in this new model, instead of me having an underlying bank, I can actually attach what you're saying, like a wallet. And is that typically like a self-custodial wallet, MetaMask, Coinbase wallet, anything?
Exactly. Okay. It can be in a non-custodial wallet.
Are you thinking about this as a platform approach or first party? Like, is to use this? Am I going to Wyrrex, downloading an app and looking at you first party, or are you kind of invisible, allowing other fintechs or platforms to embed this?
Spot on. So we actually see it as an infrastructure layer, and we think it makes sense.
I was hoping you say that.
Yes. Yeah, and I explain why. So in fintech, it's actually quite a different sort of a landscape to expand geographically. You can't really go to every country and get a license because it's just impossible. It's too many countries there, especially in the blockchain world where everything is like very global, right? And yeah, it takes a lot of time. I guess it's pretty much impossible. And so hence why we see this upchain as an infrastructure layer. Other fintechs and other wallets can use it and issue their cards to their customers, for example.
So tell me, yeah, so you sort of read my mind. Who are you selling this to as an infrastructure? Are these, you go to these self-custodial wallet apps and they say, hey, top of mind, of course, is MetaMask or something. MetaMask, they probably do this already.
Yep.
They can now give their users who have these apps or wallets now a way to spend natively, and this all feels like branded by MetaMask, but really it's you guys under the hood.
Absolutely, yeah. Well, that's the easiest way, right? We can go to these non-custodial wallets and offer it to them, and other fintechs are being sponsored, the card issuers. That's the other big sort of potential area for us to expand. And also, just in addition to the cards, we also do the bank accounts, ACH in the US, SEPA in Europe, and faster payments in the UK, and it's going to work exactly the same way. So when you're paying, when you're sending a bank transfer, we basically are taking your stablecoins, exchanging to fiat, and sent by the banking rails, and the other way back, you can receive incoming transfer, the bank transfer, and then exchange. It got exchanged into stablecoins and settled to your non-custodial wallet.
How important are stablecoins and the proliferation of stablecoins to this product being successful, in your opinion?
Good question. Obviously, it's all done by stablecoins, and currently we see more and more use cases, especially when these use cases go together with some yield opportunities. So here, people basically have their money, and they get additional money on top of them, right, as a yield.
We might need to have you on the Stable-Minded podcast for a deeper conversation on this, because I want to ask you so many more questions about the stack and the stablecoin infrastructure behind this, because I know we're just scratching the surface, but we're going to have to wrap here.
Yep.
Really excited for this announcement. Where can people go to follow you and track this product?
Yeah, so this product is available on WyrrexPaychain.com, and yeah, if you search for Wyrrex and Wyrrex Paychain, you'll find a lot more information.
Awesome. Thanks, Dmitry, for your time. All right, there's your Stable Spotlight. Thanks for watching.